The sell-off we're seeing really across the board in these FANG names, is it justified, the broad-based nature of it?
Well, for Facebook, I think partly because of all the negative headline news you've seen over the past month, over the weekend, certainly this year. And plus you have the backdrop of what's happening with the China trade wars, Brexit issues, the Fed, what they'll potentially do for 19. So I think, I've seen these sort of situations, in the past where, and they put pressure on these high multiple, high beta stocks. And so that's what I'm seeing with the FANGs. But Facebook has some individual issues that, we could discuss if you care.
All right, well, where do you stand on the stock right now, Facebook specifically?
Listen, I do like the stock. I do think, I could go on and on and talking about all these negative headlines this year, this week, over the past year or so. But I think what's most important for investors about Facebook is whether or not these negative headlines is putting pressure on user growth, whether or not users are fleeing the platform, and whether or not advertisers are fleeing the platform. And I spent this morning going through my data on monthly active users and daily active users. I'm not seeing people leaving the platforms en masse. I'm definitely for Instagram, for WhatsApp, and for Messenger, the user growth is up and to the right. And so I think that's a positive. And second, when I speak to advertisers about Facebook, particularly headed into the fourth quarter, they're telling me that, yes, they are paying attention to the negative headlines, but they actually plan to increase their advertising budgets headed into the fourth quarter, mainly because Facebook is such a hyper-targeted platform that there's no other alternative that they see that could match that.
And moving on to Apple, Pierre, I got to give it to you. You were here November 1st. Apple was at $222. You had a sell rating on it with a price target of $165. Now, last time I looked today, it was at $188. So more than halfway to where your price target is, down 15%. At what point do you get more positive on it, maybe move to a hold? Clearly, it's moving in the direction you said.
Yes, thanks. So remember what I said, what I was discussing in November. My issue with Apple was that were two things. The first one is that people who buy a phone, a first-hand phone, it's a group of people that is not growing anymore. And the second thing is that these people like their iPhone a lot, but they tend to stick to it longer, so refresh rates are elongating. These two things are explaining the weakness, the multi-year weakness in iPhone shipments. And then the second thing we discussed was the iPhone X last year was extremely successful. And 15 million buyers actually brought forward their refresh and bought the iPhone X in 18, and in normal circumstances, they would have actually bought their iPhone, refreshed their iPhone in 19.
But the stock's gotten closer to where you said, so I'm wondering what should investors do now?
So what investors should do now is probably give some room for further disappointments, unfortunately, because if my thesis is right, then expectations for the second fiscal quarter of Apple are still too high. If you have a real air pocket in demand for high-end phones, both units, shipments, and ASPs are going to be disappointing in the second quarter. We expect shipments to be down 10% in that quarter, and ASPs to be down a significant amount as well, because that's a high-end problem. So I would recommend investors to still be patient. And then, of course, beyond this adjustment, what's the story of Apple? It's an ex-growth business that is going to eventually stabilize in its hardware business, in the business of selling phones. And that's a growing business everywhere else. They sell new devices, they sell services, and they're growing very well there. So at some point, Apple is going to become attractive again. But I think you have at least to let an additional quarter, an additional guide go through before considering it.